Good Friday and welcome to the Terry and Tom show. Tom's on assignment today, so you'll be hearing from me today. And what I'd like to discuss today is a topic that we often work with on our clients, and that's Medicare and how taxes work in Medicare. So why don't we get started and we'll kind of go through a couple things in Medicare. One of the things you really need to watch out for is what they call the Medicare IRMAA cliff. What does IRMAA stand for? Well, it stands for uh, an acronym that is a mouthful. It stands for Income Related Monthly Adjustment Amount. And what it amounts to is that once you reach a certain threshold in terms of your income, you may be pushed into a higher, you would be pushed into a higher income tax bracket, which means you're going to pay additional premiums. We'll take a look at George and Martha here as an example. Uh, they have Medicare A, B, and D. Their adjusted gross income in 2021 is up a little bit from 2020, and they have $193,000 of 500 that they paid. And Bob continued to bug Martha that he wanted to really take some of his stock, just $1,000, and cash it in so that he could use that money for, he called it free money, so that when he was golfing, at least he could bet with his friends. So what did that really cost him? Did it just cost him 15%? Let's take a look. So here's what happens. Up to this point, Bob and Martha were in the Tier 1 program of making less than $194,000 a year. So their Part B premium would have been $164.90 this year. 95% of all people in America that are on Medicare pay the Tier 1 program of $164.90, and there's no monthly increase. But as a result of them making, Bob and Martha making $194,500 per year, that took them over the threshold, and so now they're not faced with just $164.90. They're really faced with $230.80, or an increase of $65.90. So these thresholds are very, very important. But not only Part B was that, so was Part D affected, and here it is. Most of the premiums, at least in this area here, the average monthly premium for your drug benefit Part D is about $25 a month. But if you go over that threshold, $194,000, you're going to be spending another $12.20 per month. So why don't we look at the impact on this and see what it really meant in terms of real costs for that golf game gambling. So George has to pay an additional $65.90 per month for Part B, and he's got $12.20 per month for Part D. Martha's got the same thing. So combined, it's $1,874 additionally this year. The stock triggered the IRMAA income tier, so they also had to pay $150. So the real cost for taking that $1,000 out now is $2,024, or about a 202% rate increase. So you really have to watch that tax trap when it comes to this IRMAA situation. There's also tax and penalty traps in Medicare enrollment. So let's look at Jim and Ann, see what they have. We see this scenario quite a bit. Let's just say Jim was 68 years old, and he retired 3 years ago. Ann is 65, and she's going to retire next month. Because she was provided health insurance for both her and her husband at work, and they had over 20 employees, they were able to, by law, were able to not apply for Part B without any penalties. But what happens if they decide not to enroll in Part B and they decide to do that for 2 years? Well, here's what happens. Under a 12-month cycle, the penalty on that increases to 10%. So that $164.90 that they thought they were going to pay for Part B now becomes $164.90 plus 10%, or almost $200 a year, and that's for each of them. So the couple is going to pay $395. If they waited for 2 years, that amount goes up to $800. So it's pretty significant. You really have to watch out for what's credible coverage waiving Part B. We had a situation not too long ago where a couple came in that were of the same sex. They never did marry, and one of the partners was covered under the other partners, and they thought they could waive Part B. Well, because they weren't married, they didn't consider that, the government doesn't consider that to be credible coverage, so they were penalized for a couple of years with a penalty because one of the mates did not have Part B. So you got to have to really watch that. The other thing you need to watch out for too is that if somebody suggests that when you turn 65 that you go on COBRA, right now COBRA coverage is not considered credible. So if you are in COBRA, you will be covered with health care, but you are going to be subject to Part B penalties when you come out of that. So that's something else you have. And finally, the penalties on the Part D Medicare, if you don't enroll, is 1% per month until you do enroll. So if you waited 2 years, you're going to pay a 24% penalty on top of that, which is about $190 or $200 a month. We get a lot of people that come into the office and say, I'm never sick, I don't want Part B, I'm not on any drugs. Well, that's great when you're 65, but what about in your mid-80s when you really start to experience some health issues and drugs become an important part of your life? As an example, when Part D became available, I suggested to my mom, who is still alive at age 99, I said to her, why don't you go ahead and pick up the Part D? She said, oh, I really don't want to spend that kind of money. It really wasn't that much, but now 6 months ago she came to me and says, you know, I've gotten quite a few drugs here, maybe I should apply for Part D. And I said, Mom, the penalties would be more than the cost of the drug. So that's not a viable option for us today. So be aware of these penalties and taxes and make sure that you have some good guidance so that you don't have any surprises. So with that thought in mind, I'm going to turn it back over to the end of the meeting, and we'll talk again next time. Thank you.
About First Benefits Group. Vision and mission, we partner with our clients to build a solid foundation of protection and wealth. We believe life is a series of expected and unexpected events. We cannot control many of these events. However, we can minimize the economic consequences these events might have on our lives. We promise to identify and quantify the potential threats caused by unexpected events. We deliver innovative thinking when developing strategies and solutions to mitigate the economic impact of unexpected events. We also deliver robust money strategies so our clients can fulfill their obligations and seize opportunities as they arise. First Benefits Group Inc. is neither a legal nor accounting firm and does not render legal, accounting, or tax advice. You should contact an attorney or CPA if you wish to receive legal, accounting, or tax advice. Copyright First Benefits Group Inc. 2023.